Yo, it's been a while since I've done the Wick lesson. You guys want the lesson on why a Wicksy works? I know a lot of you guys probably know about a Wicksy or the midpoint of a wick or consequent encroachment and like all that stuff. Like you guys wanna know like the reason why that stuff works? I'll tell you the reason why it works. Let's do a mini crash course lesson on why those work and how the ranges are. Okay, let's go. So this is why they work, right? Let's say that you have a range in the market. All right, boom. This is your range. Anytime in any given range, what is the highest probability area for price to stop if it is retracing? If we take this range from high to low like this, the highest probability area for price to stop in this range is the 50%. It's the midpoint of the range. It's where premium and discount meet. It is equilibrium, okay? So anytime you're looking at a range, you're basically looking to, and let's say you're trying to trade this move, right? Let's say you're looking at this and you're trying to trade the move short, trying to trade the move down, okay? The best thing you can do is wait for a retracement into equilibrium, okay, or premium, and then a move down, okay? So this is just how ranges work. This is a nature of a range. Price will oftentimes retrace to the 50%, which is the midpoint of any range, and then it will go lower from there, okay? Vice versa for a bullish range, right? That's just the way that price is, okay? Price is going to seek the midpoint, and then it'll go. So the reason why it works on a wick is because a wick, when you look at a wick, right? Let's say this is a candle here. This is a red candle. Okay, so this is a down closed candle. When you look at this from a range perspective, you have your open here. This is a range, right? The wick is a range. This is a range right here. Okay, and then here's your body, whatever, and then here's your close, okay? So the body, this is your body, and then this is your wick. Okay. So when you're looking at this range, that's why the Wicksy works, because the wick of a candle is part of a range. The wick is a range. Okay. So that's why that works, and that's why we use Wicksies and midpoints of ranges and midpoints of wicks to get very, very precise. The intention is for them to be precise entries that don't have much drawdown, okay? Because how much drawdown can you really have if you are entering at the middle of a range? Just the top, right? And it's not like you're entering at the bottom of the range, you're entering the midpoint of the range. So you're going to have very limited risk. You'll have like maybe 10 points, 20 points of risk, depending on how big the ranges are. But you're never going to have that big of a range, right? So that's why we use midpoints of wicks. What about waiting for a liquidity sweep? How do we make logic of people saying we must wait for a liquidity sweep? Well, there was a sweep here already, right? So like the reason why we're trading this now is because there was already a sweep here. We swept these highs, right? We swept this high here. We swept this high back here into this fair value gap. So by the way, the only wicks that you can use, okay, the only wicks that you can use are wicks that swept liquidity. They have to sweep liquidity. So that means it either sweeps a swing high or a swing low, or it sweeps into a pity array, okay? Those are the only wicks that we use for Wicksy entries. That's it. Very simple. What do you do if wick range is large? Size down. That's it. Just size down. Thanks, Scott. I appreciate you. I appreciate you. You wouldn't short a Wicksy if the stop would be 60 or 70? No. The question is, how would you manage that? No, I mean, I still would, bro. It's okay. So just because the range is big doesn't invalidate the setup, right? You would just have to size down. That's all. Like, if this wick was a lot bigger, I would just size down. I wouldn't take it with a mini. I would take it with, like, 3 minis, or sorry, 3 micros, or maybe 5 micros or something.